Thanks for joining me on another episode of the Well Off podcast. Today, I had a chance to speak with Mark Baltazar. So, Mark is somebody who started off flipping properties and then later moved to investing in apartment buildings. He's originally from Brampton, Ontario, which is the same city that I grew up in, actually. Started off in corporate sales, and he just let me know that he's actually in the process of transitioning out of his full time job and into full time investments or real estate investments. So we kind of talked about what that transition was like, and some tips for people who are thinking about doing the same thing. So we'll cover a lot of different things. Talk a little bit about flipping, talk a little bit about apartment buildings, raising capital, things of that nature. Hope you'll enjoy. And as always, I want to let you know that I'm here for you. If you have any questions about real estate, reach out to me. We can either talk about it because, as you know, I'm a real estate agent and also an investor. So there's two different things we can discuss. Feel free to reach out. Go to welloff.ca and just send me or book a call with me, and we'll talk about it then. Have a great day. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm George Masri, and today I'm here with Mark Baltazar, who is the founder of Peak Property Investments. Actually started it in 2015. Also co-founded Peak Multifamily Investments in 2019, and their new focus is to acquire and manage apartment buildings. And he's been able to accomplish a lot in the 5 years that he's been investing in real estate. So, since he started, like I just said, investing, he's been able to acquire 3 apartment buildings, a number of single-family rentals, and he's had over 20 successful flips. So, Mark started off flipping, and now his focus is shifting a little bit. So, Mark, welcome to the show.
Thanks. Yeah, appreciate you having me on the show, and yeah, excited to chat and see where it goes.
Awesome. Yeah. So I know you also have your own podcast. So maybe we'll talk about that a little bit too at some point.
Yeah, absolutely. Yeah, and I can credit you actually for remember the early days of setting up the proper tech. So
Yeah, yeah.
a lot of compliments on actually the sound quality. So thank you for for guiding me and putting me in the right
Awesome.
direction.
Yeah, I'm glad I was able to help. So funny thing, I actually recently interviewed Andrew Hines, and on
Okay.
that episode, we talked about setting up a podcast, all the equipment. So I know a lot of
Mm,
people ask us about stuff like that. So I figured it'd
yep.
be cool to do an episode on it.
Yeah.
So
Yeah.
to whoever's listening, if you're interested, you can check out that episode. So the way I usually like to start, Mark, I like to ask a little bit about you, where you grew up, certain things you remember from your childhood.
Sure. So I grew up in Brampton, Ontario. Still live in Brampton, Ontario. Haven't you know, moved far from where I originally grew up. Um, yeah, family of four. My parents, were working class. My mom worked at the bank. Commercial loan officer for a little while, and my dad, public transit. So humble kind of family. A lot of family outings and stuff like that as much as we could. It's funny. I was asked the other day, where does the entrepreneurial side of me comes? Because I, had some other businesses, and from a real estate standpoint, entrepreneurial in that regard. Hard to pinpoint actually, because my mom and dad, kind of corporate jobs, not very entrepreneurial. So I'm trying to really pinpoint kind of where where the entrepreneurial
Hmm.
side came from. Maybe my grandfathers actually, both my grandfathers were entrepreneurial in their own ways. Um, yeah, went to school, went to York University. Took a started off actually. I started. My intent was to get a economics degree. That's kind of where I was going. And then year two, second year calculus was just way too tough, and so I shifted. I was like, oh, I got to get something easier, and so I started. I went down the business administration marketing path, and and there it's funny, I actually came back to mathematics and fell in love with statistics specifically, and the power that statistics provides from a just an explanatory perspective, the ability to explain. A lot of it was kind of human behavior, and then eventually I got into consumer behavior, so explaining consumer behavior through statistics and modeling, etc. That's eventually kind of where I ended up, on the corporate side. So I was with a large Canadian uh, restaurant company. So they owned a lot of restaurants, a lot of big restaurant brands that we're all familiar with. Spent a bunch of time there, 4 years or so, and then I guess it was 2005 2005, moved over to a really, really kind of small marketing research company. I was kind of number three. And then over the last, over the 15 years, kind of we grew that to just over 30 people. And actually happy to say that I'm just in the middle of exiting that company,
Oh, cool.
which has kind of I guess a decision I made maybe 5 years ago that, eventually that was kind of the path I was going to take, and to spend more time and, all my time really on real estate.
Hmm.
And so it's interesting kind of just casting that vision, 5 years ago. And, it always takes longer than you think, at least for me, it did anyways. Cause wasn't supposed to take that long, but it did, it's okay. And now, yeah, just happy to be just investing and in real estate full time, and that's my day slash night job is
Can you
investing in real
can
estate.
can you walk us through what that was like for you to start 5 years ago, thinking about how you're going to exit your job, and also obviously we're in a pandemic now, so I don't know if that had any sort of impact on your decision to leave.
No, no, it was so it was interesting. Kind of going back five, it was a specific conference. I mean, it was in my mind. It was something that I had thought about and spoken to my wife about, and something that eventually would get there. And it was a conversation that I had with a very successful real estate investor and businessman. He had a number of businesses, and I had a chat with him, and kind of like a coaching call, basically. And you know, what I got out of that, and we spoke a few times, and a visionary guy, much more experienced than I was and am, and even at this point. And the insight really for me was, build your life first, and then build your business around your life. And and I had done it backwards, completely backwards. I was very, very focused on my professional career, and the business I was in was a consulting business. And so consulting, great business. Got to meet a lot of really cool people. Worked with some amazing brands, some of the kind of top kind of global brands that you would know today. Was able to travel a ton, but very focused on building that business. And at the same time, had a young family. And it was really, it was tough. I spent a lot of time on the road, and the things that I think that the big turning point was, when my really young kids would ask, "Are you coming home for dinner tonight, Dad?" And oftentimes the answer was no, right? Oftentimes the answer was no, because of the consulting space, right? And so in talking to this gentleman, it was really, the insight was really, build your life first, and then build your business around your life. And I knew that while it's maybe was possible in the consulting space, in the marketing space, I didn't see it. And so at that point, and again, 5.5 years ago, I decided, okay, I really got to make a shift. And real estate was already kind of in the mind, on the horizon. And that kind of set me on a path to, okay, eventually let's set myself up so I could, leave that space and do something that I'd wanted to do already for 5 years. So I was a late starter. um, and let's see how that goes. And perhaps, I think it's true today. My hypothesis was that that would allow me to, one, not that I didn't want to work hard, because that's I think built in my DNA, and a lot of us that are real estate entrepreneurs and investors. But I want to do it kind of on my own terms. And I think real estate, my hypothesis was that real estate was going to allow me to do that, and it has. And so, yeah, it's been fun. So I'm just in the middle of exiting actually right now. So, which is really cool and exciting.
Well, do you have any tips for someone who might be in your shoes like 5 years ago, who's thinking, I would like to leave my job and focus on real estate?
Yeah, I think for sure. So I think it takes longer than, okay. So for me, I'm going to speak for me. Other people may have different experiences. Uh, plan on it taking a little bit longer than you may originally anticipate. Because I think and you look at this, you look on social media, and a lot of, quote unquote gurus talk about this all the time. Quit your job and let real estate fund your life, right? Totally possible. But I think the expectation of that happening is that it happens really quick, and that with a few properties you're able to do that. That wasn't my experience. It took a little bit longer, because you have to build up a portfolio, you have to build up a strategy, build up the systems to have the business run like a business. before you can make that transition. So I think, for people that are considering that, plan for it. Like, how much money do you need to survive and to live? And then figure out if it's real estate that you're leaving your job for, what strategy is going to provide you the annual or monthly income to allow you to do that. Build up a system, or partner perhaps with somebody to do that, um, and then test it out, and start generating, that income from real estate first, and then start making the shift. But I think first start off with the vision, right? Start off with a plan, start off with a target of when. So in my desk here, and I on a daily basis in the morning, I look at goals, annual goals, what are my monthly goals, and I flip back sometimes to 2016 pages and 2015 pages, and you know the date in which I wanted to leave kept on moving, right? So it was 2017, then it was 18, then it was 19, and that's okay. You have to adjust as you go along, but set that target. Don't be so hard on yourself. I think if you don't reach it, but you gotta kind of set that date and then kind of design a plan to get you there.
Mhm. Yeah, for sure. That's great advice, actually. So if somebody is considering leaving their job, it's good to set a goal, um, set a target for when you'd like to be out of there, and then possibly look into working with somebody else, a partnership possibly, and start funding those deals so that you can replace your income eventually.
Yeah, and there's a quote, and hopefully I don't butcher it, and I can't remember at this moment who said it, but you may recognize it. It's as human beings, right? We overestimate what we can do in a year, but
Mhm.
underestimate what we do in 5 or 10 years,
Yeah,
right?
yeah.
So as long as we kind of have the vision, so I think that really the meaning of that in this context is it might not happen overnight, right?
Mhm.
It's not going to, it might not happen within 12 months. It might take 18 to 24 months or maybe long. For me, it was, 5 years ish, right? So I think don't get discouraged that it doesn't happen overnight, but just kind of set your milestones, set your goal posts. And as long as you're inching towards it kind of every quarter, every year, then, eventually you get there.
Right. Yeah, and obviously you started off flipping.
Hmm.
It seems like you started flipping in 2015. Can you tell us why you started flipping? And also, the other thing that I'm wondering is how are you able to flip? You said you have three on the go right now, I believe. How are
Hmm.
you able to flip and have a full time job at the same time?
Yeah. So, okay. So I started flipping in 50. The first acquisition was 2015. My original intent actually was I took I guess it was early 15. I took a weekend course. Well, I took a 2 hour course, then a weekend course from one of these education companies, real estate education companies from the U.S. I really intrigued. I had no idea what kind of strategy I wanted to pursue. I just knew I needed to get into real estate. At that time, I just I just didn't know what I didn't know. Read some books, and so discover the wholesaling idea, right? And so I thought, okay, you know what? I think that's how I'm going to start. So for I say about 4 months or so, I invested in marketing. A lot of signs like outdoor bandit signs, some flyers mostly. I did some digital, set up a website, and like for 3 or 4 months, I'd get leads, I'd go see houses, but nothing was coming. Like I'd make offers, nothing was coming through. Nothing was coming through, and I kind of thought, I'm sure it works, but I don't think it's going to work for me. This is just really a lot of effort to kind of get one. This meant 3 to 4 months to get a lead. Then I got a call, and it so happened that this one lead was literally 2 minutes from my house. So, and it was, I remember Sunday afternoon, and I kind of was like, oh, I don't really want to go, but let me just go, right? Let me just kind of go check it out. It happened, anyways, long story short is that deal came to fruition. And so I got under contract. And so I was going to wholesale it to a friend of mine who I knew had done a few flips. And he said, well, why don't we just partner together? And so I said, sure, but I don't do renovations. I don't know how to do renovations. I also don't want to really get into that. And I kind of really believed in the concept of working kind of on the business versus in. And to me, renovating kind of day to day was kind of working in. So we partnered. He took care of the renovation. I took care. Actually, we both financed it. We used our own money, and it was a great model. We were profitable, and so the next 20 flips worked that way essentially. Is where I'd find the deal, for most of the part. We were putting in our own capital in the beginning, and then eventually people started seeing what we're doing and started coming to us and offering their capital. And now it's 100% funded with other people's money. So I was able to do, even sometimes, in some years we did four or five. One year we did six. Now I have three. It's because day-to-day operations are handled by my partner in flips. And so I wouldn't be able to do that, if I didn't have a partner that was managing all the day-to-day stuff. And so we've segmented out the process, and I manage, part of it, and he manages part of it. And so we're able to do that. And so even when I was working full time, we still had kind of those on the go. But that's because I had a partner that was able to really take charge of a lot of the day to day stuff.
Got it. So it sounds like you're the one who is sort of like the acquisitions manager in a certain way, and then your partner is more operating as the contractor. Is that right?
Yeah,
Or
pretty
the
much.
general
Yeah,
contractor? Yeah.
yep, pretty much. And acquisition on the property side, and then also on the capital raising side. So building the brand, kind of speaking to people, and leveraging my um, I guess corporate experience in
Hmm.
attracting and building a brand.
Right. Well, that's cool. Yeah, I'm realizing that most successful businesses, most successful people have a partner in some way. It's very
Yeah.
hard to do well on your own, and just the idea that everyone is good at something, but they're also weak in certain other things. So it's important to have somebody that complements your talents.
Yeah, and also just yeah, absolutely. And I think just from a scaling, to scale, so I think to be successful, you could do one couple a year, but I think to really benefit financially from, I mean, at least a flip model, probably have to do a few, or at least, if it's only a few, then larger margin ones, which, if they're larger margin, larger projects, and there's still a significant amount of work. So
Mhm.
yeah, I think the scaling side of things, there's no way that I could do both sides of that. It just wouldn't work. Yeah.
Sure. So we before we move on to apartment buildings, can you just tell
Mhm.
me in what way you may have adjusted your flipping strategy? Because obviously the market has been impacted a little bit by COVID-19. In what ways have you adjusted?
Sure. So the flips that I have going on right now, they were acquired before COVID. The projects had started before COVID. Um, so there's still a lot of opportunities that cross my desk in terms of deals. Much more selective. I haven't purchased anything since I guess the last close was March 5th, which was right before. I haven't purchased anything since. I'm kind of holding off just to see what happens. There is a deal that I'm keeping an eye on that's still off market. Um, if the seller wants to sell, then I'll jump onto it because the margins are very, very good. So um, so I'm holding off. Although if there's something that pops up with very good margins, and I know that the deal is going to be strong, even in a COVID, then I'll jump onto it. But being a little more cautious.
Mhm.
I think the flipping strategy. It's interesting, the balance between flipping and apartment building. The flipping strategy, high returns, short term gains, but the volatility as we're experiencing right now is very high. So the
Mhm.
risk is high, and that's kind of why I got into buying, holding, and then eventually apartment buildings, just to balance that out.
Right.
So it's a balance, kind of the high risk, high reward, high volatility strategy with something that's a little boring and long term.
Yeah, fair enough.
Still pays
Okay.
off.
Yeah, well, let's talk about that boring and long-term strategy. So what are you working on now? I know you mentioned that you've been really focusing on buying apartment buildings. Can you tell us a little bit about that?
Yeah, so have two in the portfolio right now, which we're transitioning, returning over. So the
Mhm.
strategy essentially is, and it kind of it pulls on the flipping experience, I guess, in that we're acquiring undermanaged. I wouldn't say undervalued, because we're still paying good price for these buildings, but let's say undermanaged. Undermanaged being the net operating income, or the income that's being generated by the building, isn't or hasn't been optimized yet. So there's still a lot of room to grow that net operating income. And then basically improving the financial performance, and improving the financial performance typically means that you have to increase rents, and to increase rents typically you have to renovate the units, so make the units a little more appealing for kind of higher paying tenants. Sometimes it's common area um, improvements, but making, again, improving the proposition to attract better rents. And then, because apartment buildings are valued based on financials and not necessarily just comparables like single family, it really is a I kind of, it's very similar to, in the bit, I mean, not that this isn't the business world, but businesses buying underperforming businesses, inserting better management, improving the operations, and then selling it again.
Mhm.
So that's actually why I like the whole concept of kind of what we're doing in apartment buildings. It is really turning around a business.
Yeah, for sure. Can you tell me approximately what you estimate it would cost to renovate, let's say, a one or two bedroom, 7 to 800 square foot unit in a building? Because I know you probably have your contacts, you have your people that you work with on flips. Are you using those same contacts?
We've actually, in the renovations done so far, we've tapped into a contracting company that primarily focuses, probably 90 to 95% of their work is apartment buildings. So super efficient at kind of going in and turning over units. So the question of cost, it's interesting. It depends on everything. I guess everything depends, but it depends on, I guess, the state. So for example, the state of the building upon acquisition. So, um, you know, two of our buildings in Hamilton, 500 and, let's say, 50 square feet. The two bedrooms are about 650 to 700. So we're investing there for the one bedrooms about $30,000, 33,000. The two bedrooms will be in about the 35 to 40,000.
Mm.
A current acquisition that we're working on, a 12 unit, that one, so that's a two bedroom. They're about 900 or so square feet. Oh no, maybe a little bit more. Let's say 900 to 1,000. The condition, actually not too bad. The rents aren't where they should be. So it is gonna require some renovation, but there we're gonna spend probably 7,500 to 10,000. Put in some like ductless ACs, swap out the floors. There's some units that have carpets, paint, kitchens and bathroom, some kitchen counters, some kitchen cabinets on some of the units. So again, it depends, but I'd say, for a two bedroom, let's say of that size, you're looking again. So our model is we put quartz countertops, renovate, rip out everything. Usually, vinyl flooring, stainless steel appliances, ductless ACs, in-suite laundry. You're probably looking at 35 to 40K. Um, and I know that others are spending less than that, but we're trying to get top of market rents. And because that's going to help boost the NOI to where we need to hit our target
D-
ROIs.
Does that number that you mentioned, the 35 to 40, does that include new plumbing and new electrical as well, and sub paneling, that kind of thing?
Yes, yeah, yeah, give or take a few thousand, but that's pretty much an all in for that unit. Sometimes, and we experienced this in one of our Hamilton projects last year, is the so older building, 60-year-old building or so, the plumbing stacks for the whole building had to be replaced, right? Because we're putting now um, washer and dryers kind of going down, the same stack, and so that had to be improved. It was also, very old, right? Very old. So that large expense again can be divided by all the units in that case.
Mhm. What would it cost approximately to do that kind of job?
Oh, I think that was probably about 8 to 10K.
Mhm.
Yeah.
Right. And why is it that you choose to put ductless ACs?
So it's so anything to do, so we're looking at what's going to get us the most amount of rent. Um, so a ductless AC, for example, the ones we're using cost about $3,000, right? And we figure that investing that 3,000 may give us an extra, let's say, $100 per month, right? So if someone sees a unit with AC versus not, we're thinking probably $100, right? Could be more or less. Now that increase in hundred, so we're spending 3,000 to get only $100 per month, so $1,200 per year. So that kind of, at first it's like, oh, that doesn't seem like a lot. It takes 3 years to pay back. But this is the beauty, I think, of commercial real estate, right? Is so that $100, so let's say $1,200 per month divided by, a 5 cap rate. I can't do it in my head. I should be able to do it and do it really quickly. So let's say just over the course of a year, the value, the incremental value is $24,000. So
Mhm.
the way we look at it is we're investing 3,000, even if it was, with installation plus tax, 4,000. We're investing $4,000 to get an incremental value of 24,000. And
Yeah,
so we're investing the money up front from a capex, a capital expenditure standpoint, and we're going to get it back, um, in rents. In fact, we'll hold out on renting a unit. We'll keep a unit vacant just to get an extra $50 to try to max out because, in the long term, that's really where we're generating all the value.
makes sense. Yeah, that's a good point. Yeah, and definitely you're right about the cap rate thing. It's the same thing with spending that extra expenditure to sub panel. So
Yeah.
what are you looking at? Like, I think I hear somewhere around 6 grand approximately to rewire and install a sub panel per unit. Would you say that's what about what you've seen?
You know what? So all the buildings that we have right now, all were separately metered.
Hmm.
So we haven't had to, uh, install kind of separate meters for
Right.
any of our units.
Yeah.
But
So
well,
I
but well worth it. But that would be well worth it, right? Because you
yes,
think, because from a net opera, so I mean, it's just the exercise is really just to maximize NOI. So it's either
yeah,
increasing revenue or you're decreasing your expenses.
exactly.
We've analyzed buildings we haven't purchased, but we've analyzed buildings that didn't have separate meters, and it totally makes sense.
Hmm.
That capital expenditure line item will give you back your value, no
For
problem.
sure. Yeah, and there might be some people where they don't necessarily have the capital to do things like that. So maybe they will go into the building and do the renovations like you mentioned in your second property where you're spending maybe 7,500 to 10,000 just
Hmm.
sprucing it up, making it look nice, and then increasing rents that way. And then maybe down the line they'll end up doing the other stuff. So I guess
Yeah,
it depends. Everybody's a little bit different. Depends on your budget and whatnot.
yeah, yeah, and yeah, just factor that in at the beginning, right? It
Mhm.
becomes how much are you gonna invest in this thing?
Yeah. Cool. So let's talk about your finding deals. So you said you got two in Hamilton, and I believe you're looking into other opportunities now. How did you get yours in Hamilton?
So that one, so we have, yeah, two in Hamilton. We're closing on a third in Barrie, and so the Hamilton was interesting. So we often talk about the MLS. Typically you're not going to find these deals on MLS. This was actually found on MLS, and we benefited from, I think, people going into multifamily and not understanding the financing, you know, uh, nuances of commercial real estate. And so this property or this building was on the market for 400 days, and so the deal fell through. I think it was 3 times,
Mhm.
right? So someone, locked it up, put it under contract, and couldn't follow through with financing. That happened 3 times. And at first, when the selling agent told us, we're like, "Holy smokes, are we the suckers that are going to end up buying this thing? Like, why did it? Like, is it something else? Like, are we just missing something here?" And what ended up happening is that, I think people were um, analyzing it, or assuming like an 80% loan to value, just like a single family purchase, which is, not the case and very different. And we knew how to value it properly, and so we ended up being able to secure that. I think he was asking originally 1.9. We got it for 1.7 at that point, because it was on for 400 days, and the
Mhm.
seller had gone through so many of these, three basically, killed deals. I think he was happy to kind of just get rid of it at that point. So we lucked out on that point. The next one that we're working on is off market. So how we're finding deals, most of it's off market. So my partner really focuses on that part of the business, and so where he's spending his time is just connecting with, brokers that are dealing apartment buildings. And it's not. I think it's off market. Like when you think of off market single family, I think it's different than off market apartment buildings. It's not that it's being secretly traded. It's just I think the network of apartment building buyers and sellers. It's, small world, and a lot of the sellers don't want to have it kind of publicized on MLS, and so it just gets traded kind of within a network
Mhm.
of people that are buying and selling. Sometimes they make it to MLS, and it's not that, if it makes to MLS, it's a bad deal, because we're looking at two right now that are MLS and two that are off. Um, if the numbers work, they work.
Hmm.
Typically, if they make it to MLS, it's either the seller wanted to put it there in the first place, or it has already passed through a number of potential buyers and just didn't you know meet their criteria. So now it kind of gets onto the market, MLS at least. So yeah, so I think different dynamics than the single family space for sure.
Yeah. So that's great. So you're saying that you MLS provides opportunities because some people will sort of think that if it's on MLS, then a lot of people must have passed up on it privately, or that it's just not a good opportunity. But you have to look into it and give every deal a chance if it looks good, and then also build those relationships with brokers and people that deal with basically apartment buildings, and try to find something that way as well.
Yeah, yeah. And I think the other big thing, and I think this is just, the same for all real estate asset classes for the most part, is that, you know, rarely does a deal just kind of fall into your lap, right? Like it does, and I think this is the beauty about real estate, and something that I didn't realize before getting into it, which is that real estate is very creative, right? It's a very creative, business. Each deal, like, you show an apartment building deal to 10 different people, you're probably going to have 10 different ways to structure that deal, which is pretty amazing. And so I think what people need to understand is, at first blush, if the deal doesn't work, doesn't mean that it's not going to work. You just have to figure out creative ways to do that, whether it's through financing, whether it's through how you structure the deal, the offer, how you bring on partners. There's just so many different angles to make it work for you.
Hmm. For sure. Yeah.
Hmm.
As you do more and more deals, you start to realize that if you can come up with creative solutions, you're going to get way ahead.
Yeah, totally.
Yeah, for
Yeah,
sure.
absolutely.
Okay, so let's talk about a little bit about capital raising because that's obviously an important part of acquiring larger things like apartment buildings. There's only
Hmm.
so much money that you're going to be able to take out of your own pocket and put into these deals. So, can you tell us a little bit about that?
Yeah. So I mean, even on the flips, like starting, I guess after the first two or three, I can't remember. Um, you know, People started seeing kind of what I was doing from a real estate investing standpoint, and they started asking about, how do I get involved? And I didn't know, right? I kind of, I don't know. I mean, do your own flip. I'm not sure. I wasn't really kind of smart enough to clue in that, hey, I could be using other people's money. Um, but but I guess maybe kind of after the first few flips, then I started raising capital for flips, and doing a lot of them with other people's money in a bunch of different structures, whether it's using second mortgages or promissory notes, or even joint venture kind of equity structures, for flips. So I started, attracting capital partners. I still do a lot of, the flips that I have today. They're, for the most part, are funded, through other people's money. And then on the apartment buildings, the same thing is, it's people that are looking for, stability in their portfolio. Um, we do have to educate people a little bit in terms of, how apartment buildings are different perhaps than other asset classes, because I think what's happening now too, and again, not to blame social media, but a lot of the content on social media is about, getting rich really quick, retire, quit your job in 12 months, through real estate. All possible, totally. But apartment buildings are not. That's not what apartment buildings are for. This is for long-term retire wealthy on apartment buildings, have very very stable returns over time. And so, we raise capital to buy buildings, and we raise it through, people, friends and family that we know, people that kind of come in contact with us. We have a podcast. I have host a podcast, and so we get attract people that way. So yeah, no, it's kind of, the momentum's picking up, and it's interesting during these times. So we're talking April, or sorry, May 13th. So we're kind of in the middle, or hopefully tail end, but likely not, of the COVID crisis. And you know, people have been more interested now than they have been before in kind of what we're doing. It could be a function of just we're spending more time kind of marketing and content and stuff like that. but it seems like, I know there's some capital partners on our most recent project that, you know, is just sick of the volatility of the stock market. It's just too much, right? She's kind of nearing, or she's past 60 and kind of, going to retire and wants to leave something for her kids and grandkids. And just it's the volatility of the stock market is just too much, right? And so we're actually getting a little more attention now because, of all the real estate asset classes and commercial, at least, I believe, and statistically I think this is true, multifamily is the safest, right?
Mhm.
Way more stable than retail, especially right now. Office, industrial is doing well, but again, it fluctuates over time. Whereas apartment buildings, you know, are just kind of steadily over time. Everyone needs a place to live, right? And so that's kind of the premise. And so yeah, so we raise capital, for our projects, and it's I think you know these times it's actually been helpful for us.
Yeah, for sure. And we already mentioned the how further ahead you can get by collaborating with someone and pooling your resources and your skills and whatnot. So definitely a good option for certain people. I
hmm
was just curious, have you ever worked with a coach, like a real estate investor coach or anything like that?
So I did some coaching sessions early on. Let's say early in my career, early in my real estate investing career, so 5 years ago.
Hmm.
This is a gentleman I was speaking to, I mentioned earlier. I did take about, uh, 3.5, 4 years ago or so, before I got into apartment buildings, I did take some courses on apartment buildings specifically.
Hmm.
And so that helped kind of just give some foundational knowledge. And I'm not in any structured coaching programs right now. I think I've been fortunate enough to have a good network of people around me that I can tap into on a regular basis. So kind of micro coaching here and there. I think that's really important, is just to have, uh, if you don't have a network of people that you can rely upon and ask a lot of questions and, you know, try to build that out. I've been fortunate enough to kind of have that, throughout my real estate investing career.
Hmm. Awesome. Well, that's great. Um, Obviously, a coach can really help you get ahead, and you've done your research, you've taken courses, and I know you're active. You're always at different investment events and such, so that's
hmm
great.
hmm
Before we move on to the next section, was there any last messages you want to share with the audience?
Um, I think, yeah, I think, if you're considering getting into something larger like apartment buildings, I think, my belief is, and this is why we started the podcast that we have and the content that we put out there, the webinars and stuff. It's Our belief is that anyone can do it. Whether you have, little to no money today, or no experience in it, you can get there. I think it's some of the things that we hear, some of the barriers, the psychological barriers that we hear about all the time. So it's too big, it's very large, I don't have the money for it. But those are just limiting beliefs. And so those can be overcome through, whether it's coaching or partnering with someone or educating yourself. I think there is a little bit of a fear of kind of taking that next leap, which is okay. I think, leveling up always, there's a little bit of fear involved, but it's absolutely kind of doable for anybody.
Hmm.
And so I encourage, if you're thinking about it, then, you know, no reason to not get it. Just, educate yourself, partner with someone to help you do that.
Yeah, for sure. Yeah,
hmm
because education only gets you so far. There's got to be some action with it, and
Yeah.
I agree with you on that. Okay, so let's talk about the next section, which is the random five. I'm gonna just give you five random questions, and you're gonna respond with the first thing that comes to mind.
Okay.
All
Yeah.
right.
Yeah.
Number one, who was your favorite teacher and why?
Oh, okay. Funny. Mr. McPhee, very interesting, actually. And so he was grade six teacher, I believe. And he was also my volleyball coach throughout elementary school. Why my favorite? It's interesting. He's taught now, so he's still teaching. I think this is last year. Um, so he taught me in grade six. He's retiring. As Mr. McPhee's listening to this, that'd be pretty amazing. He's retiring this year. He's taught my three boys as well.
Cool.
Great teacher. So we've kind of, my wife's, very involved with the schools, and kind of really, made sure that he taught our three kids. They do French immersion, but he was the English teacher kind of in those programs.
Mhm.
And so great, yeah, great guy, super guy. So, yeah.
Oh, that's awesome. That's
Mhm.
pretty cool that your kids get to go
Yeah,
through the
yeah,
same experience. Probably
yeah,
a little bit different now, but
yeah,
still
totally.
awesome. Number two, what was the best compliment you've ever received?
Wow, putting me on the spot. Best compliment
These
ever
are totally
received.
random. So,
Yeah, this is good. Best compliment you've ever received. Hmm. Let's see. I guess, huh? Maybe like infectious smile, infectious kind of infectious energy.
mhm,
I think I've heard that a few times in in my previous working life. When in the office or when I'm around other people, is just there's an energy that I give
yeah,
off. So and it's positive energy. So that's great.
cool.
So that's
That's a tough
happy that
question.
it's happy that's a positive energy. Yeah,
Yeah, it's a tough question because yeah, I know it's not always easy to think about stuff like that. But
yeah.
that's a great
You're
answer.
making me blush. You're making me blush.
All right, number three. What do you like most about your family?
um, hmm. You know what? We do a lot together. There's a lot we do a lot together. Actually, in fact, every activity that I enjoy doing, they enjoy doing, and vice versa.
Mhm,
So I've a young family, so three boys. Uh, my wife, loves outdoor stuff. We love sports. My boys are all involved in hockey. I'm on the ice have been on the ice with all of them kind of throughout their playing careers. So we do a lot together. So I think we've all of our extracurricular activity, it's not a chore. We all kind of enjoy it. So I think that's a good thing.
awesome. That kind of goes back to your like build your life, or sorry, your
Mm,
business around your life, rather
yes.
than the other way around. Yeah.
Yeah, totally. I mean, because my kids are involved, and all three of them are involved in rep hockey. One of the big steps I did take, I think it was 3 years ago, was to restructure the way I worked in my other business as well as real estate, and spent more time at home because of that, so I can travel to all these kind of games and stuff like that. So it was a conscious decision, some sacrifices on the professional side, but that it was more important to be with them, and as they played hockey.
Awesome. That's great. All right, number four. What fictional place would you most like to go to?
What fictional place would I most like to go to? What fictional place? Wow. I'm thinking of movies here now.
Yeah, first thing that comes to mind.
Oh, geez. Okay. Where ET comes from.
Okay. I've never seen that movie, so
Oh,
I
no.
don't
You
know.
got to
Yeah,
check it
there's
out.
a lot of movies I haven't seen.
Someone asked me the other day, "What's your favorite movie?" And I said ET. And they're
Okay.
like, "Oh, wow, that was a surprise."
Yeah.
It's just one that I've always. I mean, it's an old one, right? But
Yeah, yeah.
it's a cool story.
Yeah, awesome. Okay, and then number five, which never changes, so it's not random. But what success principle do you live by?
Okay, so I think a couple things that I remind myself of. One thing I have on my board over here, which is think big, aim high, act bold, right? Which is a quote taken out of the Gary Keller's book, The
Yeah,
One Thing. So
yeah.
that kind of is in my office, and I look at that, and it's like when there's big decisions to be made, and things are like, oh shoot, am I gonna what do we do?
Hmm.
That's like, yeah, no, you have to do it, right? It's kind of move yourself forward. Um, that's a more recent one that I've kind of put up. The other one that's always stuck with me, and I think as I mentioned before, is you got to work on your business versus in. So
Hmm.
I try as much as possible not to get into the weeds where I don't have to. The weeds are the details of it's important to understand the details of your business and the operation side, but you want to set up the systems to manage it. And then the third one, I know you asked for one, but I'll do three. Is this whole idea of build what life do you want first, and build your business around your life. I think that's super critical. A lot of us get it back. I got it backwards, right? I got it backwards, and realized not too long ago that that was the wrong way to do that, but wrong way for me. I mean, so three things, anyways.
Awesome. Those are all great for sure. So before we finish things off here, do you want to share how people can reach you and also maybe what services you might be able to provide?
Sure. Yeah. Pretty active on social. So Facebook, you can reach out to me, Mark Baltazar. We also started a Facebook group specifically dedicated to apartment building investing. So the Apartment Building Investors Network on Facebook, on Instagram as well. So at Mark_Baltazar, and I think our podcast as well, which is just it's all dedicated to apartment buildings. And we have different guests sharing their experiences, and so anywhere there you can hear what I'm talking about, or reach out to me.
Cool. Well, that's awesome. Thanks for being on. I appreciate you sharing your story and all the things you've learned along the way. So I wish you all the best, and I look forward to seeing you soon.
Yeah, thank you. Real pleasure and honor to be on your show. I know you had some really great guests. So happy to be kind of a part of that list.
Thanks. I appreciate it. All right. Take care.
Cool.
As always, thank you for tuning in to this episode. I hope you got something good out of it. I wanted to offer you a free report that I've created just for you as a listener. The report is The Beginner's Guide to Real Estate Investing, and hopefully this will help you identify what type of properties, what kind of investment properties would be suitable for you. And you can download it by simply visiting www.welloff.ca/guide. Again, welloff.ca/guide. Enjoy, and I look forward to connecting with you soon.